In this video, I'm going to cover what a market order is, when to use one, and when not to use one. So let's get started. So what's a market order? A market order is an instruction to your broker to buy or sell a stock as soon as possible at the current market price. So your broker is whoever you choose to open up a stock account with. That could be Webull, Robinhood, Charles Schwab's Think or Swim, just for some examples. There are a ton of options out there. And the market price is whatever a buyer and a seller is willing to pay for a stock at that specific time. With that said, let's look at some examples of when you might use a market order. The first example of when to use a market order is when you simply don't care what the price is that you pay for the stock. Because depending on the stock that you're trading, using a market order, you may be paying more for the stock than what the price is that you see on the screen. When you're trading a stock like Apple, Google, Amazon, Meta, any of these big companies that have a lot of trading volume, you're typically not going to have any issues. When you use a market order, you're going to get filled pretty dang close or within a couple cents of the price that you see on the screen. All right, so let's look at one more example of when it might be beneficial to use a market order before we look at some of the cons. So this is going to be for someone that's more of a day trader, not a long-term investor. And let's say you're looking at day trade SoundHound, okay? That's what I have pulled up on the screen right now. And you want to take advantage of this move, all right? So this is a minute chart. I mean, I don't know if you're familiar with trading, but, for a stock to move 10% within, 20, 30 minutes, that's a pretty big move. And you can see this one minute candle right here jumps 3% within seconds, okay? This is going to be a prime example of when you want to use a market order, all right? When this thing dips down, use a market order because you're going to get filled somewhere within this price range, right? It might be on the higher side. Maybe you get lucky and it's on the lower side, but at the end of the day, you're in the stock somewhere around this area, all right? And you're ready to take advantage of this move. Vice versa. If you were to use a limit order here, let's say I went in here, I placed a limit order, create, buy, right? It comes in, all right, I have my limit order in, but this thing jumps before I placed it, right? Guess what? You just missed out on 3% in seconds, okay? Where if you did a market order, you might have got filled in closer, right around here. Again, might not have been the best fill, but you would have been into the stock to take advantage of the move. All right, we're a limit order here. You do this and you're like, oh man, let me chase it back up, right? And you just keep chasing and chasing and chasing, and before you know it, the move's already happened and you missed it. That's gonna be another example of when to use a market order. Again, this will be another example of when to use a market order. Let's say this thing starts falling, you're like, hey, I just wanna get out, all right? Maybe you get out, not at the perfect price, maybe it could have been better, but you're out, right? To where vice versa, let's just say you used a limit order again to sell and you place it up here and you don't get filled and the stock starts falling. Guess what? By the time you either move your limit order down or, place a market order at that point, you're going to be down on the position even more. And so in these examples, it's better just to use a market order, get out. Again, it might not be the perfect fill. You might not have got out, at the perfect price that you wanted, but you got out and, you weren't in it through this big move down. So with that said, let me show you some examples of when not to use a market order. So going back to what I was saying before, sometimes when you use a market order, you don't get filled at the best possible price. And that's because there's a bid price and an asking price. All right, so the bid price is what you can sell the stock for right now on the market, all right? And the asking price is what you could buy for right now. And when you use a market order, typically you're going to get filled closer to the ask price. Now again, trading big stocks with high volume like Apple, Google, Amazon, it's not gonna make a difference. But let's take a look at my screen, all right? Here I have a penny stock pulled up. Ticker symbol GNLX, and you can just see by the chart, this thing is choppy. I mean, it just jumps up, jumps down. I mean, you have like these little like ticks, like it's hardly has any volume at all. And with a stock like this, typically there's a big spread. The spread is the difference between the bid price and the asking price. So let's just use this as an example. And unfortunately, the markets are closed and my level 2 over here isn't showing any data, but that typically shows me what the actual bid and ask price is at this given time. So hypothetically, let's just say the market's open and the stock is trading at 255, okay? This is like the actual price, which is typically in between the bid price and the ask price. So let's just say in this scenario, the asking price is 280, okay? And the price that you could sell the shares for is 240, all right? And 255 is the in between, all right? If you were to place a market order on this, you're probably going to get filled at the ask price. That's 15 cents higher than what it's showing on the screen and what the stock's actually trading at right now, okay? 15 cents might not seem like a lot, but let's say you're buying 30,000 shares of this stock. Well, that adds up. Again, if you really don't care what you're paying for the stock and you're looking at the bigger time frame, you're like, man, I don't care if I'm in 15, 20 cents higher because I think this thing is going all the way back up here and I'm going to hold it for years. Doesn't really matter. Go ahead, put your market order in and move on with your day. But if you're day trading this and you do a market order and you get filled 15 cents higher, you're already down on the position before it even started. As soon as you get filled, you're negative. So now you got to make up a percent or two before you even get positive. So again, that's going to be an example of when not to use a market order. This is when it might just be better to use a limit order. And typically, when you use a limit order, you will get filled closer to the middle of the bid and the ask. So again, it just really depends on what your plan and goal is for that stock. But some of these spreads, on these penny stocks especially, I've seen 50 cents, a couple dollars, especially if they're moving fast and they're volatile. So you just got to be careful. Again, just take a look at the bid and the ask and see what the spread is. Just make sure it's not something crazy. The only other time that you're not going to use a market order is during pre-market or after-market hours. So if you're not aware, you can actually place trades and buy stock before the market opens and after the market closes. But you're not able to use a market order during that time. So if you look at my screen real quick, I actually have pre-market and after-market hours set up. And here in the gray is pre-market, and here is the aftermarket, and then in the black is the actual day of trading. You can see there's typically not a lot of volume in pre-market and aftermarket depending on the stock, but you are able to place trades when the market is closed during those times. However, you are not able to use a market order during that time. All right, so let's sum that up. You're going to use a market order when you don't care what the price is that you're paying for the stock, or the stock is moving really fast, either up or down, and you either want in or you want out, okay? The times that you're not going to want to use a market order is when there is a huge spread on a stock, and if you're trying to place an order in pre-market or in aftermarket. So there you have it. That's a market order. I hope you found this video helpful. And if you haven't already, check out my video on limit orders, and I'll see you guys in the next one.